Hello, I'm Dr. J.K. Sachdeva. I'm going to present a very important study under IMF research. Today, we are going to explore one of the most critical and rapidly evolving risks in the modern financial system: cybercrime and digital fraud. Based on recent IMF Working Paper, this is not just about hacking. This is about risks that can affect banks, markets, and even entire economies. Why this topic matters? As financial systems become increasingly digital, from online banking to digital payments, the exposure to cyber risks has increased dramatically. What makes this issue serious is that cybercrime is no longer limited to IT departments. It directly impacts trust, financial stability, and economic activity. A single cyber incident today can trigger systematic consequences. To understand the topic clearly, we need to differentiate between three key concepts. First, cyber events. These are attacks targeting financial institutions like banks or exchanges. Second, digital fraud, where individuals are targeted through scams or deception. And third, payment fraud, which directly involves financial transactions such as credit cards or transfers. Together, these form the broader ecosystem of cyber risk in finance. The IMF study analyzed more than 14,000 cyber events across 162 countries over a 10-year period. And what is particularly important is that financial sector's share of these attacks has more than doubled from around 6% to 13%. This clearly indicates that financial institutions are becoming increasingly attractive targets. See table 1. If you look at the table, you will see how cyber events are distributed across sectors, and finance is consistently among the top. Cyber attacks can be broadly divided into two categories: exploitative attacks and disruptive attacks. Exploitative attacks, where the objective is to steal data such as customers' information or financial records, and disruptive attacks, where the goal is to interrupt services, for example, through denial of service attacks. The IMF data shows that exploitative attacks account for slightly more than half. But disruptive attacks are also significant. This means attackers are not only stealing data, but also trying to disrupt operations. Let us compare sectors. When we compare different sectors, we find that finance is not mostly frequently attacked sector. Public administration and healthcare actually face more attacks. But the financial sector is far more sensitive because even a small disruption in finance can have ripple effects across the economy. Financial sector breakdown. Within the financial sector, the distribution of cyber events is highly concentrated. Banks and credit intermediaries account for nearly half of all incidents, followed by security markets and then insurance. See the table 2. This table clearly shows where the risk concentration lies. This is why banking systems are considered the most vulnerable segments. Trend over time. One of the most striking findings of the IMF study is the upward trend in cyber incidents over time. If you observe the graph, there is a noticeable surge after 2020. This coincides with the COVID-19 pandemic when digital adoption accelerated rapidly. More digital activity means more exposure and therefore more cyber risk. Let us now focus specifically on banks. The data shows a clear increase in cyber incidents targeting credit intermediaries. This is partly because banks are central to financial transactions, and partly because attackers often exploit weaker institutions or third-party vendors. In many cases, the vulnerability is not inside the bank but in the ecosystem. Interestingly, the cyber incidents involving central banks are relatively low in number, but their impact can be extremely high. The diagram shows how a cyber attack on central bank can disrupt payment systems. And this can lead to liquidity issues, loss of confidence, and even economic slowdown. So even rare attacks can have systematic consequences. Geographical trends. Cyber incidents are not evenly distributed across the world. I was wondering it happened only in India. But the paper says the United States records the highest number of incidents, followed by regions like Europe and East Asia. There are highly digital economies which increase both opportunity and risk. At the same time, emerging economies are often more vulnerable due to weaker cybersecurity frameworks. Now let us move from cyber events to digital fraud. The number of cyber-enabled fraud cases has nearly tripled over last decade, reaching around 2.5 million cases. And importantly, this is like an underestimate due to underreporting. The upward trend clearly shows how fraud is scaling globally. Payment fraud is one of the most visible forms of cybercrime. Credit cards and bank transfers are the most common channels. But there is also a rapid rise in crypto-related fraud. As new technologies emerge, new vulnerabilities also emerge. The impact of cybercrime goes beyond individual losses. It affects the entire financial system. Loss of trust, disruption in payments, liquidity constraints. And ultimately, it can slow down economic activity. In developing countries, these losses can even represent a significant share of GDP. The IMF identifies several key risk factors. First, third-party vulnerabilities. Second, data breaches. And third, weak cybersecurity frameworks. These risks highlight that cyber resilience is not just about technology, but also governance and regulation. To address these risks, the IMF suggests several policy measures. Strong regulatory frameworks, better incidents reporting systems, and increased international cooperation. Because cybercrime is a global problem requiring coordinated solutions. So the key takeaway is very clear. Cybercrime is no longer just a technical issue. It is a core financial risk with systematic implications. If you found this analysis useful, do like, share, and subscribe. Read the full paper given in the title and stay tuned for more research-based insights explained in a simple and practical way. Thank you very much.
Always share the videos of Dr. Sachdeva to your friends who are interested in data analysis.